The information in this episode is current as of the date recorded and is not intended as financial, tax, or legal advice. You should consult your tax, financial, and/or legal advisors before implementing any transactions and/or strategies concerning your finances.
Hi, I'm Jason Nickerson, President and Chief Operating Officer at John G. Ullman Associates, and today I'm going to be reviewing with you an article that was posted on Wednesday, June 12th, 2024 by Yahoo Finance titled, "Inflation Eases in May as Consumer Prices Rise at a Slower Than Expected Pace." On the date this article was posted on Wednesday, June 12th, we had a lot of data drop on us as investors and just those paying attention to what is happening in our economy. And one of the most highly talked about topics over the last 2 years or so is inflation. As we know, the Federal Reserve has been working very hard to fight inflation and bring that number down. Well, we got some relatively good news last week as the Consumer Price Index was reported and remained flat from the previous month, from April to May, and rose 3.3% from the prior May 2023, which is a good reading overall, and inching closer to the Federal Reserve's target of 2% inflation. We still have a ways to go. It's the lowest monthly reading since July of 2022. And the article attributes some of that good news to a decline in energy prices and specifically gas prices. Now, what's interesting as you read this article, you'll notice that the most commonly reported inflation gauge is CPI, the Consumer Price Index. And even a closer watch part of that index is core CPI, which strips out food and energy prices. Two areas that are most important to us as consumers and investors, frankly, that are not part of the core closely watched gauge of CPI. If you continue to read the article, it mentions that the Federal Reserve doesn't even use this most commonly reported index, but uses something else called PCE, which stands for Personal Consumption Expenditures. And a core part of that measurement, again, stripping out food and energy prices. They were happy with the reading, but if you listen to the Federal Reserve's briefing following this report coming out, you would have heard that they stay committed to bringing inflation down to the 2% level. So while good news, overall there seems to still be more work to do. Now, the markets applauded this outcome by reaching new highs over the next few days. And interestingly enough, one of the dynamics out of this article and out of this data and the following and subsequent market reaction is that it seems that there's a disconnect between the health of the economy and the markets and the data coming out. It seems that investors are really waiting to hear when the next interest rate drops will be. Now, if you were listening to news and media outlets months ago, there was an expectation for multiple interest rate decreases throughout 2024. In this article, it does report that that expectation has come down to maybe even just one interest rate decrease in 2024, with potentially multiple interest rate decreases going forward. Now, that can be looked at as two ways. As I just said, investors are waiting for this, it seems, and this could potentially push markets even higher if there is an interest rate decrease or multiple interest rate decreases in the near future. On the other side, it could be a signal of an economy that is slowing down too much, and the Federal Reserve actions of holding interest rates at these higher levels for too long could pull the economy back too quickly, and so they have to reverse those actions by lowering interest rates. The article does also report some other data, very data-heavy article. It reports going even further back than last Wednesday and talks about data that was released on the Friday prior about payroll that came out from the Bureau of Labor Statistics that showed the labor market slowing down in one regard, but continuing to remain very healthy in another. It talked about how wages came in higher ahead of estimates, but unemployment rose only slightly to 4%, up from 3.9%. So overall, if you take all of that data that has come out, it seems that the economy is still very healthy, and we still have some work to do to get down to the Federal Reserve's 2% inflation rate. One of the other interesting parts of the article goes on to talk about shelter prices, and there's two measurements to shelter prices that the Federal Reserve watches: rents and then equivalent rents. Okay, equivalent rents relate to those who are homeowners, but does a calculation of what the equivalent rent would be on that dwelling. The article explains that those shelter prices continue to remain high, at least according to expectations, even though energy prices have come down. The last part of the article that I find absolutely the most interesting is other areas where prices have actually pulled back. And these are areas that I would call discretionary areas, consumer discretionary areas, like airline fares, new vehicles, communication, recreation, and apparel. All of these areas saw price decreases over the prior month. Now, why this is interesting to me is because these are areas that tend to be put aside first when consumers are deciding how to spend their money. They'll spend their money on required expenditures first and then discretionary areas afterwards. So if prices are falling in these discretionary areas, the secondary areas of spending for consumers, it means that there is a slowdown and consumers are making choices, that inflation has caused the required expenditures to go up. Therefore, they have to not spend in these other areas. So demand is falling in these discretionary areas. So overall, like I said, a very data heavy article. If you enjoy reading economic data, this is a good article to go back and read in detail, and possibly a good report and understanding of where we have been and where we might be heading from here. Thank you for staying to the end of this article review. If you'd like to read the full article, the link is down below in the description, and be sure to subscribe for future article reviews like this and other videos.